In this video, I'm going to give you a simple and powerful way to trade trend. I'm going to remove all the confusion and give you a step-by-step process that you can follow to consistently approach the market and pick out those high probability trend continuation trades. If you do what I'm about to share with you and you build rules that I'm about to share with you in your trading, you're going to have yourself a very, very powerful trading system. So let's get stuck in. What we're looking at here is the pound Swiss, and this is the daily time frame. So what we're looking at are swing trading setups. I'm just going to remove these drawings because, well, first of all, you can see how well support is respected, right? And resistance is respected. Structure levels, once they're tested once, certain levels are very powerful. They're respected over and over again. And I just deleted off that structure zone here, but you can pretty much see where I draw in my line. In fact, let me just draw a horizontal line in here, and you'll see these levels are respected over and over again. And this is called support and resistance. So those of you who are familiar with my swing trading approach, I talk about the 6 rules of trading, right? Which is the market condition, the market phase, support and resistance, then using some indicators, and then looking at price action patterns, and then looking at candlestick patterns. And if you can do that, you're going to be able to build a really solid trading system. So the first thing is a market condition. We're looking at this market, is it bullish or bearish? In this case, it's bullish because we're going bottom left to top right. We're putting in new highs, and higher lows, right? So we've got the higher highs, higher lows. So when a market is trending, we look at that in terms of runs and pullbacks. So new highs, outside returns, or pullbacks, or retracements, or whatever you want to call them. Outside returns, there's lots of different names, but I usually refer to them as runs and pullbacks, right? So we've got the run and we've got the pullback, and we've got the run and we've got the pullback, and we're putting in this new high, and we're now in the pullback phase. So when you're looking at the market phase, if you've identified a market condition to be bullish, you want to look for a potential entry into a trend continuation on that pullback phase, right? Phase 2, if you want to call it phase 2. So we got phase 1, phase 2, phase 1, phase 2, and this is where you want to be looking at that entry, potential entry. The next thing you want to look at is support and resistance. So there are, as I said, certain levels are respected, and over again, they're respected each time they're tested. And if you look back, you can start looking at this structure level as a whole to see if it holds any weight, if it is respected historically. And you can see 1, 2, 3, right? I like a minimum of 3 tests. You could argue this is a test as well. It's not as sharp. It's not as high quality as I would like. But if you look here, we dipped below, then it became resistance, right? So we was held there. We also held here, right? So there's like 4 or 5 holds of that level that are pretty strong. And that's great. This is the daily time frame. Now you can also look at angular support and resistance. So some of you guys use angular support and resistance, and what you're looking at is number of tests on an angular support line. So in this case, we've had multiple tests of the angular support line as well, and we've also got a crossover. We're at the intersection of that major horizontal and major angular support. So what we're doing is we're adding all of this stuff up to build weight for entry, to give us a real strong, solid case for entry. The next thing you can look at is indicators. So the reason we use indicators is for a couple of reasons. One, to add confluence and, confirmation to the case for entry. But 2, as kind of filters to put us into higher quality or keep us out of low quality setups. And one of the indicators you'll see on the screen here is the exponential moving averages. I've got the 8 and the 20 and the 50. All right, just quickly, guys, 69% of the people that watch this channel haven't subscribed to the channel. I'm going to be sharing a lot of content like this, and content that's going to help you get the life that you want by building wealth and becoming financially free. If you're interested in that, please hit the subscribe button and hit the notification bell so that you're notified when I post more of these videos, because you're not going to want to miss them. With that said, I want to thank you for being here watching this one. Let's continue with the other points. And I don't recommend using one of these in unison, but when you use 3 together and they all, say the same thing, that's what gives power to the setup. So ideally what we're looking for in a trend is the 8, the 20, and the 50 being in that order from price action. We want to see them fanning out to see a nice potential strengthening in trend. And then on the pullback, we're looking for a pullback down into that 2050 zone. Okay, so we're looking at the 2050 zone, which we're in right now. And once we can get into that 2050 zone, that's a great place for potential entries, because we're likely to revert back to that mean growth of those, or the mean movement of the trend. So we're looking at the 2050 zone. We're seeing this rollover. We're seeing horizontal and angular support and resistance. Okay, we've identified the market condition. We know we're in the right phase. So now we can use price action patterns. Price action patterns, which is the 5th law, means we're looking for deceleration. We're looking for deceleration in that pullback. So you can see that we had this strong pullback, and then we start to decelerate. We start to hold off, like really slow down. The momentum starts slowing until we start to round off. And where do we round off? At previous structure resistance should become support. So what we're doing is we're looking at all of these things to give us the best pinpointed entry, to get the best price, to capture the biggest move possible. Because you're rarely going to catch the bottom and sell the high every time. What's more likely is you're going to get in somewhere around this pullback, right? And the better you can get in, the lower you can get in, the better, obviously. And then once you've identified a price action pattern, and for some of you it might be like a retest. So some of you might go down to the 60 and just say, well, do you know what? This was a double bottom, right? I've got my retest here. I've got my double bottom, and that's my price action pattern. But for those of you who just trade on the daily time frame, what you're looking for is some kind of candlestick pattern now, which is like a tweezer bottom. Okay, some of you, this will be tweezer bottoms. This is how you define tweezer bottoms. You've got equal lows, price action in the upper 50% of the candle. So this is a tweezer bottom setup. The problem with this is what? If you're trading tweezer bottoms, they haven't completed. Okay, the tweezer bottoms, you have to wait for the close of this candle for the tweezer bottoms to be formed, because tweezer bottoms is a plural name, which means you need 2 of them, which means you can't just wait for the first one to complete and then look at the second one as it's in play and go, well, that's close enough. You can't be half pregnant, right? It's either a tweezer bottom setup or it isn't. So you'd have to wait. And this is where the patience comes in. And this is where it's painful for traders, right? This is where rookie traders just jump the gun. Can't wait to pull the trigger. Can't wait to be in the trade. Don't want to miss out. Fear of missing out. Fear of leaving money on the table. Fear of losing money, right? And that plays a big part in traders messing up their consistent approach. Whereas if you're a professional and a disciplined trader, you wait for the tweezer bottoms. When the tweezer bottoms complete, you know you've got a way higher probability of being right now, right? Because if you got in now and then this market tanked down here and closed down here, or rallied to the upside, that's not a tweezer bottom. Some of you might have just waited for the doji, which is here. Some of you might have waited for, might need a 3-bar reversal, which you'd need this candle to close higher than this one, this previous candle high. Some of you might need a low test wick, right? Like a low test, a pin bar. So these candlestick patterns are your rules for entry, essentially. So you need to tick all the boxes along those laws of going, right, we're in a market condition is bullish. Market phase is pullback. We've got the 2050 zone. We've got horizontal and angular support at that level. We've also got an even handle number, right? 15 flat, 1.15 flat. We've also got deceleration in price. We've got a price action pattern that shows that we're likely to continue up. And then we've got a candlestick formation, a candlestick pattern in the form of a tweezer bottom setup where we can enter. Now, fast forward until tonight when this completes. If this is a valid tweezer bottom setup, then you enter next bar market, or you enter above that high, just as a buy stop order, a couple of pips above the high of that second tweezer bottom. With tweezer bottoms, I like to enter next bar market. So on my close of my analysis at night, just before bed, you just enter next bar market. And then you set your stop below the low. So a few pips below the low of the tweezer bottom setup, and then you're in. And that's it. So although this hasn't played out, this is a great opportunity for you guys to follow along. I've just laid all my cards on the table there and shown you my approach, what's going on in my head, how I'm looking to get involved. And that would be a great swing trade for me. Because if we get into this now, let's just say that market doesn't move too much and we get in around here, great, right? Your targets are going to be at the highs, okay? And your stop's going to be below the low, and you're talking about a 3.5% trade, or 3.5 to 1. Just one last thing to mention on this. If you are using multiple indicators, it doesn't have to stop at the exponential moving averages. You can look at MACD divergence down here. You can look at using fibs for confluence as well. So you go from the previous pullback to the new high, and you can see we're at that 382 there as well, which is great. Okay, 382 retracement. That's where you're looking for a pullback to. Very prolific ratio for pullbacks. So you've got the 382 there as well. So yeah, you can start to weigh up all that together, and it will give you added confirmation, added confluence to the trade setup. Textbook swing trading setup. So I'll leave this one to you guys now. I'll follow up on this maybe over my Vegas trip, but I'll leave it to you guys to follow up. All right, so just final thoughts on that. Just make sure that you consistently approach the market this way. Build rules around each of these laws that I've just explained to you, and see how consistent you can be with it, and watch your trading transform in front of your eyes. You'll be picking out those trend continuation trades like a winner, like a professional. And if you want to see more of these, again, please make sure you subscribe to this channel and share these videos around so that we can get this information to all those people following that rubbish out there. I appreciate you for watching. Until next time, take care, have a great rest of your day, and I'll see you then.